Hi, I am Shannon and I will be your host for today's topic about burning questions in the Singapore property market. In the last episode, we had Colin share his insights on why the 2020 Singapore property prices have defied the pandemic and economic recessionary pressures to move higher. I am delighted to have Colin with us today to share his thoughts on the Singapore property market for 2021. Colin is the founder of PSF Real Estate Academy. Since 2014, over 1,000 home buyers and property investors have attended the property investment education programs conducted by Colin. Besides training, Colin also does extensive study and research into the Singapore property market. He is also a licensed property agent. Hi Colin, thank you so much for joining us today.
Hi Shannon, nice to see you again and always a pleasure to be doing this program with you.
It's my pleasure. So today, as we are just beginning a new year, we are going to talk about the Singapore property market for 2021. What are your thoughts for this year?
I think 2021 is going to be a very interesting year for the Singapore property market. The official second half 2020 numbers affirm that the property market has not been impacted by the negative sentiments from COVID-19. And for this year, 2021, I see some strong indicators to suggest that the URE private residential price index will continue its upward trajectory. Since hitting the bottom of second quarter of 2017, the property prices have actually increased by 12.6%.
That's amazing. We know that the property market has performed above expectations in 2020. What are some of the indicators that, in your opinion, may push the property prices even higher this year?
I see 5 indicators, right? I'll start off with the first one. Record number of HDB hitting MOP. From 2012 to 2017, HDB has steadily increased its supply of BTO flats due to the shortage that resulted in massive COV values during the heydays. If you remember, that's about 10 years ago.
Yes.
Right, yeah. On average, 25,000 BTO units were pushed onto the market each year from 2014 to 2017. And guess what? Some of these HDB owners will be looking to cash in and upgrade, thus forming the demand for the primary and secondary market for private residential properties. So we are almost at the start of this new wave of HDB upgraders entering into the private residential market, which will create a strong demand for condos.
That's very logical. Surely some of these flat owners will be looking to cash in if the profit is good, right?
That's right.
So in fact, there is a trend of more HDB owners selling their flats once they complete their minimum occupation period.
Precisely, yes.
Yep, that points to the fact that more HDB owners are seeing their flats as an investment rather than a long-term home.
Yeah, I certainly agree on that point about HDB owners seeing their flats as more as an investment, right? Okay, rather than a long-term home. So perhaps the younger Singaporeans are more savvy in looking at properties not just as a home, but from an investment perspective. So apart from these HDB upgraders, the second indicator is the falling land supply from the government. So as a developer, their business is to acquire land, develop properties and sell to buyers like you and me.
Right.
So without land, it simply means that the developer will go out of business. So how does a developer acquire land? One of the main sources of land supply is from the government through their half-yearly government land sales, or GLS for short, GLS program. Right. However, the government has been cutting down land supply from 2014 and today the land supply is almost at a record low for this decade.
Oh, wow.
So if the supply from GLS is not sufficient to meet the demands from the developer, they will likely look at existing condos and try to attempt to do an en bloc sale. That leads me to the third indicator, right? The en bloc market may be heating up soon, right? Leading to another round of en bloc market fever, which may push future new project launch prices even higher. So in the last en bloc fever from 2016 to 2018, developers started to buy land aggressively when their total unsold inventory fell towards about 20,000 units. So since first quarter of 2019, the unsold inventory has been on a downward trend. And URE data also show that the number of unsold private housing units in projects with planning approvals continue to shrink from about 26,000, right, as of end third quarter 2020, right. This is down 5.6% from the previous quarter and about 29% contraction from the high of 38,000 units in the first quarter 2019.
Right.
So the reduction has come on the back of strong developer sales and limited private housing land sales that we saw in 2020.
Wow. So based on the statistics that you have quoted, it does seem like a real possibility that the developers may be facing a land supply crunch soon, right?
Actually, we are already starting to see the early signs of this land supply crunch, right? Due to COVID-19, developers are now given additional 6 months to make their bids for the GLS. So this means an additional 6 months of delay in securing their land, thereby exacerbating the land supply crunch issue. And because of this real possibility of delay in the securing of the land, we have seen developers bidding fiercely for each piece of land on the GLS program. So the first land tender since the pandemic began has closed at the 𝗕𝗂𝗃𝗂𝗃𝗂𝗃 site, right? So this site drew a whopping 15 bidders, 15 developers went in, right? And the top bid was $930 per square feet per plot ratio, right? PSF/PPR. So although it is just a land sale, but I think this is very significant because it represents the highest number of bids since the Holland Road site tender went in May 2018, which drew 15 bidders from 10 consortiums, right? Okay, and the market has not seen such intense participation in the GLS tender since July 2017, which was like more than 3 years ago, where 15 bidders came in and compete for the site at Woodleigh Lane, which is now the Park Colonial. So this is the highest land bid ever for GLS site in the outside central region, right? And it's also much higher than the 4 to 9 bids on average that we see for private residential government land sales or site, over the last 18 months. So the top bid for this 𝗕𝗂𝗃𝗃𝗂𝗃 site, I think, would require the developer to sell the future condos for about 1,700 per square feet.
That's
which
really
is
expensive.
Yeah, actually it's on the high side for OCR property, right? Which is bullish for new units in that area, currently trading about 1,500 per square feet. So the 𝗕𝗂𝗃𝗃𝗂𝗃 land bid result to me is actually the fourth indicator that we are seeing early signs of developers coming back to the market to compete aggressively for land.
Wow, that's actually very good insight. Now I'm curious, are we going to see any en bloc fever coming back soon?
Maybe not so soon, right? Okay, the last round of en bloc fever was from 2016 to 2018. But you notice that the market started to bottom out in 2017, which was a time when all the developers were buying land in the en bloc market. So today we are seeing the result, many new launches, right, and most selling at higher prices than just 5 years back. And I think developers may start buying land aggressively maybe towards the second half of this year or next year, 2022, when these new projects are launched, and we are looking at 2023 or 2024 as the next peak.
And what's the final indicator?
I think the final indicator is that existing units of new projects are depleting fast. So today we have about 150 new launches, across Singapore, and most projects have achieved a good level of sales. Some are even nearing fully sold status. Just look at some of the new projects that were launched in the second half of 2020, such as Verdale, Penrose, the Landmark, the Link at Bukit Timah, and Clairvon. All of them achieved remarkable sales numbers on the weekend that was launched, just over 2 days.
Wow.
Right? It seems like any project that is launched today, right, will be quickly snapped up. So falling inventory and the lack of new supply will lead to an urgency among developers to replenish their land bank. And there could be an increase in confidence among developers that the property market has seen its worst and will start to return to growth in this year and next year, 2022.
Colin, as I'm listening to your sharing, I feel so overwhelmed by the statistics in the property market. For me, I just read the news, but I do not really follow the numbers.
Actually, it's perfectly normal. That's what most people do.
Yeah, exactly.
Yeah.
So obviously for someone like you who follow the data closely, you are able to interpret so much more from the numbers.
Because I always believe that, as a property investor, you need to understand the fundamentals of the property market first, so that you can, capitalize on any opportunities that come along the way.
Exactly. Thank you so much, Colin, for sharing so much wonderful insights.
You're welcome, Shannon. Thanks for having me here for today's program.
We have just heard from Colin Ee, who is the founder of PSF Real Estate Academy and a licensed property agent, share his views on the outlook for the Singapore property market for 2021. Colin has been conducting property investment programs to share his research, analysis, and insights of the property market, which are neutral, objective, and without any sales pitch. And the good news is, since 2017, Colin has been conducting his 2-day property wealth creation program for just a nominal fee. As vacancies are limited, do quickly register by clicking on the link below.